So I just released the first version of my new Stock Analyzer spreadsheet, and in this video we're going to do a full walkthrough so you can see how it works, and we'll go through a step-by-step demonstration so you can learn how to actually use the spreadsheet. But before we get to that, in case you're new to the channel, my name is Ryne Williams, and here we strictly talk about dividend stocks and how you can invest in them to create passive income and reach financial freedom. So if you love dividend stocks and if you're on a mission to retire early, then hit that subscribe button. I'd love to stay in touch as we both continue to grow our portfolios and collect that cash flow. But anyway, guys, regarding the spreadsheet, I think the best place to start is to first inform you what the spreadsheet is and what it does. So it's a stock analysis tool and intrinsic value calculator that is designed to offer a comprehensive snapshot of a company's share price, financial data, and dividend stats. And regarding calculating a company's intrinsic value, the spreadsheet allows you to do so using two different methods, the first of which is a discounted cash flow method, and the second one is a relative valuation method, both of which we'll demonstrate later in the video. And the last thing before we get into the walkthrough, there are a couple very important things that you need to know about the spreadsheet. The first of which is that this spreadsheet only works with Google Sheets. There is not an Excel version available yet, but there potentially might be in the future, so stay tuned. And the second thing to know, while the spreadsheet is free to download and free to use, all of the data on the spreadsheet is populated using a premium Google add-on called Sheets Finance. And at the time of recording, Sheets Finance does offer a 15-day free trial, and upon downloading the spreadsheet, I've also included a discount code that allows you to get your first full month of Sheets Finance free of charge, so you can basically use it for a month and a half without having to pay for anything. The next thing to know is that the spreadsheet does not work with real estate investment trusts or ETFs yet. In the future, as more data becomes available through Sheets Finance, I plan to make more evolved versions of this spreadsheet that can accommodate REITs and ETFs. So once again, stay tuned, guys. And the last thing to know, I have noticed there are times when some of the data shows an error message, and when you come across any technical difficulties, you'll just want to reach out to Sheets Finance and see what's up. But anyway, moving on to download and actually start using the spreadsheet, there's a link in the description of this video. It's the very first one. You just got to click that. And upon doing so, it'll take you to this landing page right here where all you need to do is just enter your email address into this, click download for free. And from there, you'll get an email from me. And within that email, there is the spreadsheet link. And there's also a PDF walkthrough guide to help you get set up and start using the spreadsheet. And from there, once you've opened up the spreadsheet, you'll find yourself on this page right here. This is the Start Here page. And before you can do anything else on the spreadsheet, you need to follow these steps right here, because once you first open up the spreadsheet, you only have access to view the spreadsheet. You can't edit or make any changes. So what you need to do is make a copy of the spreadsheet. And these steps right here outline how to do that. So step one is click File at the top of the spreadsheet right here. We're going to go down to Make a Copy and click that. And then from there, you'll choose where you want to save the spreadsheet within your Google Drive, and you just click Make a Copy. And then once that's done, you should be able to go in and start inputting your own data. But we're not quite ready to get rocking and rolling yet, because we still need to install Sheets Finance, which once again is the data provider for this spreadsheet. To do this, guys, it's pretty easy. You're just going to go up here to Extensions. You're going to go to Add-ons right here and then click Get Add-ons. And it'll pull up this thing right here, which is the Google Marketplace. And you just type in Sheets Finance like that. And then it's this one right here. So just click on that. And then somewhere over here, there should be something that says Install. So just click that button. And once again, guys, when first starting out, Sheets Finance does offer a 15-day free trial. And I don't even think they require you to put in your credit card. So that's nice. But anyway, once that's done, you should have Sheets Finance installed. And you need to do one more thing. Just go back to the Extensions menu. You'll see that there's a Sheets Finance sub menu in here. So go over there, go to Refresh, and then click Refresh All. And then once you do that, you should be good to go. And if you want step-by-step instructions on how to install Sheets Finance, I've created a whole page on the spreadsheet just for that. You'll find it next to the Start Here tab at the bottom. And now that we are all rocking and rolling, we are over here on the Stock Snapshot page, which is where you'll be spending most of your time on the spreadsheet. And as we can see, there's only 2 yellow cells here. So these are the only places we actually need to input any data, with the most important being the ticker cell right here. And let's use Apple as our example. And once I hit enter, it'll start loading all of the data. It usually takes a few seconds to do because it's a lot of data to load, so just have a little bit of patience with it. Cool, and so now that all of the data is loaded, you guys can see it really comes to life. There is a lot of great stuff here. Over here in the top right-hand portion of the spreadsheet, we'll find all of the financial metrics for the company. We've got revenue per share, the growth of revenue, gross profit margin, earnings per share, and a ton of other helpful things. And the averages on all of these growth metrics can be found over here in the bottom left. And we'll also find some helpful averages right here: gross profit margin, dividend growth, return on equity, and return on invested capital. And then we even have some dividend stats down here, which is something similar to what you might find on Seeking Alpha. And then the portion of the spreadsheet I refer to the most is the visuals section right here. And just by looking at these few charts, we can really learn a lot about what's going on with Apple. We can see that they're growing in sales pretty aggressively. They're growing in earnings per share as well. Free cash flow is looking fantastic. The dividend growth is off the charts, and they are buying back shares at a pretty aggressive rate. So everything looks pretty picture perfect here with Apple. And like I said, when using the spreadsheet, this page is where you'll be spending most of your time, but there's still two more things we have to do. We need to come up with the intrinsic value for Apple, and we're going to be doing so using two different valuation metrics, the discounted cash flow and the relative valuation, each of which have their own dedicated pages here on the spreadsheet. Now we'll kick things off over here on the discounted cash flow calculation page. And for those of you who have never heard of discounted cash flow, not familiar with it, basically it allows us to determine how much a company is worth today based on how much money we think it will make in the future. And from here, there are only two places we need to input data. The first of which is this growth rate used right here. And we can use Apple's historical average free cash flow to estimate its future free cash flow growth. But that may not be the best number because you as the investor might think, well, I don't think Apple's going to grow its free cash flow by 12% moving forward. Or on the other hand, you could think that it will grow its free cash flow by even more. So here, let's be a little bit more conservative than 12%. I don't know if Apple's going to be able to grow their free cash flow by that much moving forward. Maybe hypothetically, we can estimate like a 7% free cash flow growth rate moving forward, at least for the next 10 years. But then the last piece of the puzzle that we need to take into account is the discount rate, also called the margin of safety. And there's a few different ways you can come about finding this number. And if you guys want to learn more about discounted cash flow and how to come up with discount rates or margin of safety, you can click this link right over here. It'll explain it all for you pretty clearly. But anyway, in this example, let's give ourselves let's say an 8% margin of safety right here, hit enter. And with the 7% free cash flow growth rate and an 8% discount rate, it gives us an intrinsic value for Apple of $170.90. But if you manipulate these variables, it will change these numbers pretty dramatically. Now, let's say, for example, we don't need as big of a margin of safety with Apple. Let's say that we can probably get away with like a 6% discount rate or a 6% margin of safety. You can see that really changes things. That makes Apple's intrinsic value a lot higher than the previous calculation. It would mean that it's about 35% undervalued. And as I'm sure you can imagine, every investor is going to have different numbers that they use for these calculations. Therefore, every investor is going to come up with a different intrinsic value for whatever company it is you're looking at. And now moving on, the next type of valuation calculation we'll do is a relative valuation. And the idea behind this is that similar assets should sell at similar valuations. And so in these boxes right here, we're going to put in a few different competitors or peers to Apple, companies that kind of operate in a similar space. And we'll take the average of those companies' PE ratios right here, multiplied by the earnings per share, and that will give us an intrinsic value for Apple just based on the relative valuation of the companies that we use. So here we're going to use Microsoft, we're going to use Google, and we'll use one more, let's say maybe Dell. And with these three companies, they have an average PE ratio of 26.26 multiplied by Apple's earnings per share means that its intrinsic value is about $161.50, which would make it about 11.6% overvalued right now. And now back over here on the intrinsic value page, looking at this column right here, the two valuation calculations we just did are going to be automatically input right here for us. And we're going to want to apply an additional margin of safety to both of these calculations just to give us some extra room for error. And for that number, let's use like a nice round number, like 10%. And based on that, it tells us that Apple's intrinsic value and the price that we probably should be buying it at is just under $150 per share, which would mean that right now it's still about 20.5% overvalued. And with that, guys, that's pretty much the entire spreadsheet. You know, we got the stock snapshot page, we've got the discounted cash flow, we've got the relative valuation model. And at this point, you should be all set up and ready to start actually using the spreadsheet. If you haven't downloaded it yet and you want to start using the spreadsheet for yourself, then just click the link right over here. And while you're at it, you should also check out my free dividend portfolio tracking spreadsheet, which I'll also link right here. But anyway, guys, thank you so much for using the spreadsheet. I really hope you enjoy it, and I'll see you in the next one.